Hi, everybody, and welcome to the Cybersecurity Insight interview series. I'm Ariel Heavens, your host, and today, a dear friend and colleague and teacher of our cybersecurity program, Meredith Schnur, is going to be with us. Meredith is the U.S. Cyber Brokerage Leader in Marsh's Financial and Professional Specialty Practice. In this role, Meredith leads all the brokering operations in the U.S. and is responsible for driving client and operational excellence at every level of Marsh's Cyber Center of Excellence. She also works with Marsh's national and zonal FINPRO and distribution leaders to streamline and enhance Marsh's cyber modeling. And then prior to Marsh, Meredith was the national practice leader of USI's professional risk practice, and she previously held a similar leadership role at Wells Fargo Insurance. And throughout her 25-year career, so now we're dating you, and you were dating me, she is focused solely on errors and omissions coverage and its subsequent evolution into cyber insurance, and is a nationally recognized expert on cyber and E&O insurance. So please welcome Meredith to the program.
Thank you for having me.
Hi, how are you?
Fantastic.
Good. So Meredith, we've known each other for, I think, 4 or 5 years now going on. And, one of the things I never knew is how you actually got interested in cybersecurity. So how did you get interested in cybersecurity?
So I think the answer to that question is actually a different question. So in insurance, maybe now you'll find a few people that answer this a little bit differently, but for the most part, anybody that has been in the insurance industry for the amount of time that I have, and even for less time, will say that cyber insurance found me, as opposed to being something that was sought out. Today, we have, obviously internships and students and university grads that are very much interested in going down this track from a specific cyber insurance and risk management track. That did not exist, when I went, back in the day when I graduated college. But I would say that I think it's important to kind of understand kind of how cyber insurance morphed in insurance, right? So when I graduated college, I joined AIG, and I was what we call an errors and omissions underwriter, right? So just think of malpractice, from a medical perspective, but I did it for technology in the 1990s. So if you had a technology company, and by the way, they didn't call it technology then, they called it electronic data processing. So I'm really dating myself. But AIG would sell an insurance policy that protects them from financial loss arising out of, their failure to provide the services intended, right? The technology failure or the service failure. And that's how I started my career. And then, as we started to hover around the 2000s and the internet era, we started talking about internet liability, right? And everything going from the hardware device, into the internet. And we had to go with the flow with that because the same exposures existed and the same potential financial damages were the same for companies that were providing internet services, and so on and so forth. And then about 2005 is when everything blew up in privacy. You had California pass 1386, and then you had 17 other states jump on the bandwagon, and then it just blew from there. So most of us that are in cyber insurance today, in some capacity, outside maybe those individuals that are maybe 5 years or less experience, will tell you it found us because it morphed out of what we call a traditional technology errors and omissions type of insurance underwriting or brokerage. And we have been, evolving with this risk ever since then.
Mm-hmm. Yeah, that makes a lot of sense. And I think a lot of people have come up out of property and casualty and E&O into this area, not by choice, but by the fact that the market is so interested in cybersecurity, and that we're no longer looking at electronic data, just electronic data. We're looking at, the number one business risk. And
I think what you'll find interesting is we're called Marsh Cyber Practice, right? The largest broker in the world, cyber practice. We do a lot more than procure cyber insurance for our clients. So think about the Cognizant situation, right? Cognizant is they're a technology provider, right? They have how many clients that have been affected by their failure, in this case, to prevent an unauthorized access of some sort into their network. These are liability claims against them, right? For business interruption. that's E&O. This goes back to,
Exactly.
this does not change, right? So we do, when we're procuring insurance policies, it's not just a cyber insurance policy. We do absolutely procure standalone cyber insurance policies, but 99% of, at least, for us, of the policies we place have elements of intellectual property infringement, content infringement, errors and omissions, and whether it's professional liability or technology, and it encompasses it. It's just that today, in this day and age, everybody calls it cyber.
Right.
We didn't call it cyber. We called it network security we called it internet liability in 1998, 1999. We called it network security around 2000 to 2005. And then we called it privacy for a couple of years. And it has really, that cyber nomenclature really took hold, not until 2010.
So when I'm thinking about, when I hear you say that, Meredith, is that, one of the things that I think we don't have a clear understanding on is what the market is really in cyber insurance, because a lot of people have embedded cyber into their E&O and their other policies, and they haven't teased it out and appropriately codified it from an accounting perspective. Are you seeing that as well?
Well, sure. We call that silent cyber. So if you ask me, one of the hot topics and what we spend a lot of our time talking about is called silent cyber, right? So what has happened over the last 5 to 10 years, as we see the proliferation of ransomware and business interruption type losses arising out of, network security issues, we're finding that other insurance policies are answering to these, right? When they really haven't been underwritten to answer to them. And what they call is unintended cyber coverage or business interruption coverage under these policies, right? So that exists. So when you're talking about the cyber insurance world, which is probably from a premium perspective around the $2 billion range, that is really standalone identified cyber coverage. That does not include like the quote unquote hidden or unintended cyber coverage that you get in some of these property casualty policies, where, really the intention of those policies is not to answer to cyber risk.
Mm-hmm. Yeah, exactly. Interesting.
Yeah.
So let's just maybe break it down for people. What exactly is cyber insurance, and what is the role of a cyber insurance broker? How are they supposed to work with you?
Yeah, so I think that the reason why understanding what cyber insurance is so critical is because most people don't even understand it. They just think, oh, well, okay, it's some kind of insurance if something goes wrong. But that is true in a way. But what folks don't understand is that it's truly a financial impact coverage, insurance coverage, which is now migrating because of silent cyber for us having to be able to find solutions for property damage, which we can get into. But if you have a company that has a failure to protect their computer systems from an attack, failure to safeguard information, failure to prevent system failures within their environment, and it causes financial injury either to themselves or to others, that is the purpose and the sole purpose of a cyber insurance policy. There are probably 9 insurance agreements in a cyber insurance policy. The crux when it was born was to be a liability policy to provide coverage for those third-party claims against the company for that failure to protect the computer assets and the data which resides on those computer assets. And it has grown in the last 10 plus years to cover, not only what is on the computer, but off the computer, and has migrated to system failure type of issues. So failed integrations, failed implementations, server capacity issues, et cetera, because the property policies are not covering the business interruption arising out of that. So cyber insurance is it's a financial risk transfer mechanism to help pillow the balance sheet in the event, just like any other insurance, but a financial element to it. Cyber brokers, their sole role, as far as I'm concerned, and let's just take out E&O and media and all the other stuff and intellectual property that we do, is to help our clients understand, measure, and manage cyber risk, right? Because understanding it, and for everybody on the phone that's more techie and IT, this is probably your first non-IT related series, that you're doing. Understanding, when you ask someone what's in your environment and where is it, that's a really big question, right? It's the same for the risk manager who, and other financial executives within companies that we work with to say, we have to help qualify what is your cyber risk from an exposure perspective, from an entirety and enterprise risk management perspective, and peel that back, because most of the time they have an understanding, but they really don't understand the intricacies of all the various ways that they can be financially harmed arising out of that exposure. So they
Right.
understand when we spend 100% of our time on that. So at the end of the day, we'll sell you an insurance policy, but it takes a lot to get there because we have to start out at the understanding, right? So that's what understanding, qualifying your cyber risk, then measuring. So brokers can't just procure an insurance policy anymore. You know, at the end of the day, you hire us to make sure that that four-corner contract works when the claim comes in, whether it's from a cyber extortion ransomware, whether it's a third-party liability claim, whether it's PCI-related fines and penalties, whatever it is, you expect that to work. But the clients want to know, how do you help me measure? How do you help me measure? Because I got lots of tools in our toolbox, and I work with our CISOs, and I work with this person, but how can you truly help us as our intermediary in cyber risk? And then the managed part is the easy part. That's what we know, which is transferring it to a risk, you know, to an insurance policy. So understanding, measure, manage. Our role as a broker is not just, okay, let me bring you to the market and here's your insurance policy. It used to be that way. It used to be much more transactional. I'm not saying that there's not, you know, a lot to be said about, you know, having those underwriting relationships, but that doesn't fly anymore. The understanding and the measuring has to come into play too. So our role as brokers has evolved significantly over the past, you know, 5 years.
What we found in the study, the 3-year study we did with the Fortune 1000 in the cyber insurance industry, was that people are woefully underinsured. You know, anywhere from 200 to several thousand% in some cases. And now we see that it's becoming a requirement to do business with certain entities. They want you to have cyber insurance in place. They want you to have a certain aggregate limit. What are you seeing in terms of how people are looking at that? Because one of the things that bothered me about that was when we walk into an organization and they say, well, you need $10 million of cyber insurance, and we're not even inside your network, right? We're not touching your sensitive data. So your data exfiltration risk with us is minimal. So how are companies starting to have those conversations around what is the appropriate amount? And how do you see that from a vendor perspective, perhaps, as well?
Yeah, I mean, that's like a double question. That's like a twofold question, right? From the vendor perspective, they're just trying to do some kind of classification system. They're just trying to put some method to the madness of, you know, let me classify my vendors from, you know, hazard class 1, which is low hazard, to hazard class 4, which is high hazard, however they define it, connectivity, access to data, whatever. And then they're putting it in. When I tell you how archaic insurance is from a risk management perspective, they really are just putting it into buckets, saying, if you're in number 1, you only need $1 million. If you're in number 4, you need $10 million. There is no bespoke decision making that goes on depending on the individual service or product that is provided by this vendor. So I think it's really important that if you are a vendor to know when you're being asked to carry a certain amount of insurance, it's not like there's been a lot of thought put into that. It's their way of helping classify and then having the financial guarantee on the back, right? Is saying, okay, well, if something goes wrong, I need to know you have an insurance policy that I can go after.
Sure.
Right.
Yeah,
so
sense.
Just know that on the vendor, we're not sophisticated here in insurance. You know, and on that first question, everybody's trying to figure that out. You know, you could imagine that our clients are in the news every day. And we are working on the most sophisticated large cases out there that you read about that maybe you've been affected by. And, you know, our clients in the Fortune 500 buy anywhere from, you know, it could be 100 million all the way up to the largest tower that we place in the market today is 750 million. What really kind of irks me a little bit is that when you hear stats like, oh, well, the cyber insurance market is $1 billion+ market, meaning that notional capacity is that we can actually build towers that are above $1 billion in financial, you know, from a financial risk transfer perspective.
Not possible.
I mean, notionally it's there. We have the insurance community. We have the papers. We have insurance companies that have the ability to write cyber, intended cyber, not non-intended cyber. However, what I will share with you is that it's very difficult to build a very large tower. And we do we have one of the largest towers that are out there, and it is 750 million.
One of the things I see that isn't being addressed in cyber insurance is that whole idea of risk accumulation metrics across your portfolio. We see that, technology risk in and of itself, looking at it from a digital perspective, is one of the things that is very misunderstood in terms of, okay, if you have a vulnerability or an incident that goes across a certain technology and your portfolio is stacked with that technology, then how sustainable is the portfolio, right? Like, this is one of the questions I think that people in the cyber insurance struggle with, because in order to make that tower more aligned to exactly how much risk they have, what we've seen is that the other flip side of the risk accumulation issue is that we see companies that have shadow IT all over the place and there's no governance whatsoever. So they're spinning up, databases with tens of millions of records, which equates to billions of dollars of exposure, which no one even knows about until you start asking them, like, well, how are people doing their day jobs, right? And everyone's afraid to talk to the business because they're afraid that if they talk to the business and they say, well, this isn't kosher, right? You could take the company down in some cases if this amount of records was exposed. And people are tiptoeing around it in a way that is not in everyone's best interest, let me just say.
No, and if you're right, and if you're not AWS or Azure or anybody like that, you have when your negotiation of your contracts with your clients and your customers in the matter is you're leaving a lot of risk on the table. They don't want limitations of liability in their contract if they hire you, and most companies are hopefully doing a better job at agreeing to unlimited liability from a network and privacy perspective. So we do have that issue. So yeah, we see that. Here's what's going on in the underwriting community. They can't get their hands around the aggregate. So they are looking toward their reinsurance brokers, and Marsh happens to be partners with Guy Carpenter, is a reinsurance broker. The reinsurance brokers are being tasked with bringing aggregation tools to the underwriters to help them understand and measure what their portfolio could look like should they have one incident with one provider that causes an aggregation issue from a claim perspective.
Right.
Exactly. We're witnessing it right now with Cognizant, and this has happened before, right? So this is not new, but it is a situation that they are tasked with. So brokers are tasked with developing tools to help clients measure their cyber risk, and we work with partners, third-party partners, internal. We are developing our own mechanisms and tools and algorithms to help. So whether it's working with third parties or us to come up with Marsh proprietary tools, and underwriters are struggling with two things right now. They're struggling with aggregation. They've been struggling with aggregation. And now they are really looking to their reinsurance partners to help them look at their portfolio and help them with the aggregation. And they're also struggling right now with the proliferation of ransomware. So for example, very common thing that happens on a weekly basis with me is an email I got yesterday, which is, Meredith, I need you to call the head of claims at CNA. I have 2 hours to get a 1.4 ransom approved. I mean, this is every day.
No pressure.
No, right? And it's just because we can't get the adjuster on the phone, because remember, we're a people business, right? This is not like everything happens where we do transfer the money to the hacker, and everything else happens, electronically, but insurance is still insurance, right? We still need to get that done. So these are the issues that underwriters are having an issue with right now. I actually called Alex after his discussion last week because I had a question for him, because another thing that underwriters are doing right now are they're hiring third-party vendors like BitSight and Security Score. They've been doing it for a long time, Security Scorecard, Science, to help them monitor and scan their insured's networks. Whole host of other issues with that we won't go into from a network security perspective. However, they're really trying to get out in front to say, we know there's a vulnerability in your systems. We'd like you to pay attention to it, manage it, and come back to us so that they can help mitigate risk, and then obviously not ultimately lead to some kind of financial damage and them paying out of their insurance policy. So that has been that's just like a 6-month-old shift in insurance right now. Whereas, and they were always using them as underwriting tools. Now they're actually contacting the clients and through us and saying, here's the situation. This is what we've detected with working with our vendors. Can you please look into it? So our insurers are kind of stepping in the managed security space in a way, shape, or form. So, you know, we're evolving every day in this space and trying to keep up with it from an insurance perspective.
Yeah, one of the things that comes to mind in listening to you and listening to the whole idea of we're putting together the vendor program to launch in the fall. And these are things that we need to include in this class. The whole idea of where does the vendor come in from an insurance perspective? And we do have people on that committee that are working with us on that. But really to get more into the nitty gritty of it, to understand where does the responsibility begin and end? How can we participate in this community in a way that there's more transparency across the vendors, and there's more understanding of, you know, what does the vendor exactly do for you? If the vendor is a cloud service provider, they're very different than they are a service provider like your attorney or your accountant. It's different because they're not really dabbling with your technology. Yes, they're touching your data, but they're not responsible for the controls on your cloud, right? They're not responsible for incident response and, you know, their pen testing and their vulnerability scanning and on the host of other things that are behind their security programs. So we need to be clear with people and give them solid learnings on, you know, in this case, veer left, in this case, veer right, because we're seeing that the devil's in the details here, right? It's like, it's not simply a yes, no question. And it's not about answering a bunch of questions that are, you know, 25 pages long that are really, you're trusting that that vendor really has the controls in place. I don't know if you're aware of this, you probably are, but DoD has recently implemented a new program around auditing for their vendors that are touching critical classified data called the CMMC. Mm-hmm. And I see this becoming something that will be adopted across the commercial lines of business out of the agencies over the next 5 years. That's my prediction, because we've been way too long in the trust only mentality, and we need to burst out of that and get into the trust and verify mentality, because at the end of the day, if that vendor has a data breach, it's you, the organization, that's going to be paying those costs and notifying those people and having the stock declines and having, you know, the SEC interviews and so on and so forth.
Yeah, I don't think anybody really has an appreciation, because we do, about how when they get a ransomware situation, when they have a ransomware situation, how, I mean, it stops everything in the water. Mm-hmm. Everything just stops. You know, and so a lot of what we do on the brokerage side is help tabletop, help that it's going to happen. So now let's work it through.
Right.
So
it's not an if, it's a when.
Right. It's not, you know, and we've been doing that for years and years and years, but the ransomware, you know, and the sophistication of that right now is really, I mean, we're all behind the eight ball. Everybody knows that, right? They're even more behind the eight ball. And it's not because they don't have top-notch security folks, regulatory folks, financial folks, everybody, operations folks coming to the table. It's not about that. We have very sophisticated clients, very smart decision-making, whatever. It's just that you have to know the resilience part is key, but you have to really just get used to it and understand how to do it, because it is debilitating when it happens.
Exactly. They have to be prepared ahead of time, and not when all of a sudden they can't log in, because it's too late then.
Yeah.
It's like,
well, it happens every day. I mean, yeah. And if we speak to it, we get, there's not a day that goes by really that we don't have a ransomware claim that we're messing. And in some way, shape or form, depends on the size of the company. So we handle companies anywhere from 100 million in revenue all the way up to, you know, Fortune 10, right? And you could probably imagine that the response and the sophistication runs the gamut, but don't assume, don't make assumptions about, you know, the bigger the entity, the more sophisticated they are. That would be a wrong assumption. And we handle them in all different ways, shapes, and forms, depending on how sophisticated, how ready, how resilient, how practiced, that they are, and how much they need us. Some of our clients are already way ahead of the game, and they're just like, make sure we get the insurance that we need, and that's the role we want you to play. Others, we are on the floor with the breach response, bringing the privacy attorneys, the forensic investigators together, the digital wallet, the everything, and coordinating that whole thing to make sure that our client has what they need. So that is the migration and the evolution of an insurance broker in this day and age, where traditionally it's what's the four corners of the contract, make sure it works, and make sure we're working with our insurer partners to make sure we're getting payment.
Yeah, it's more of a trusted advisor role where you're stepping in and showing them where the gaps are in the business, as well as walking them through what the policy is, what the policy is used for, how you would apply the. So going back to ransomware, we've seen obviously COVID is, making cyber criminals much more opportunistic, and that we've had our ransomware panel a few weeks ago, ransomware 2.0, and we talked about that. But I think that one of the things that would be interesting maybe to follow up on is another topic that's related to that is who's making the decisions. Do you see who's making the actual decisions about not just how much insurance to buy, but understanding across the entire program? The tabletops are not just the CISO. The tabletops are the legal team. The tabletops are the IT team. The tabletops are the compliance people. The tabletops are the CISO. They're the CRO, the CFO. How do you see this impacting the way organizations from a structural perspective are looking at things?
Yeah, we've come a long way. Back 10 years ago, risk managers had no visibility into the CISO or the security, anything, Chinese wall. That wall has been broken down. Some risk management professionals are much more comfortable, internally, bringing everything to the table. Now, the way that it works now in most cases, let's just stick to Fortune 500, because once you get into the middle market, it runs the gamut of how decisions are made. But in the Fortune 500, there are sophisticated risk managers, right? They've been around. This is their careers, right? So they know how to rally everybody within the organization to make sure they have a seat at the table. So the CISO is helping them make decision on that, from a quantification perspective. The financial folks, the general counsel is always, they understand what they have given away in their contracts, what their caps are on damages, what their limitations of liability is, how much they transfer. One of the questions that came in while we were talking was, on the Cognizant deal, like I'm inclined, the question was, and I think it was from you, Les, was, not vetting a third-party supplier, isn't that really onus on you? Well, it doesn't matter. It's what does the contract say? Because if you negotiate the contract with it being that other than willful violation of law or, some type of, true intent, then chances are it's just negligence. And
that's impossible to prove almost 99% of the time, right?
That's right. So you would think,
really
yes.
With what have you agreed to, right? Yeah,
what have you agreed to? What financial damages has your customer suffered arising out of your malpractice, whatever reason, right? And then what did we agree to in our contract?
Exactly.
So you would think so, but the way that it plays out is there really isn't. Now, if you're looking at an AWS contract, it's a little different. It's all on you, right? Whatever happens in your environment, whatever in your security, don't coming to us, if something happens. But most other providers don't have the wherewithal to push back on having no liability.
Mm-hmm. Exactly. So one of the things that we're teaching in the enterprise cybersecurity program is, of course, the class that you and I co-teach together, which is looking at cyber insurance from the business perspective, the first party, the third party, the quantification, and pulling that all together. Where we haven't addressed it, which we will address in the fall, is this third party aspect of it. And what do these contracts look like? Because they're all over the map. Some of them are wonderful and some of them are absolutely disastrous. But the gist of it is that you as the decision makers have to be the ones who understand what you're agreeing to, right? And we have to educate these decision makers as to, if it was me, what would I do? What's our best practice? Like, what would we have, if we could?
I'm laughing, I'm smiling, because you have no idea how many times our clients come to us and say, can we agree to this? It's like a business decision. Like, you want me to tell you how much
Exactly.
insurance you have? I could tell you how much insurance you have, right? But well, we should be totally pivoting and shifting this conversation into, should you be making this business decision? Are you betting your company on this? Right? How much is this contract? Because if you start, doing some of those things. So yeah, that's been an ongoing issue and continues to be. And it puts a lot of stress on some of the smaller mid-market, providers of security services, cloud service managers, services in order to compete.
Exactly.
Yeah.
So let's just pivot a little bit and talk about what it's like to be a woman in a man's world in cybersecurity. What challenges have you faced? How have you overcome them? Do you see a shift happening with, we've had Me Too this past year. We've had, quite a bit of emphasis on equality. Is it getting better?
I have to say, when you sent me this question, which I did not put down, but you sent me this, I had to actually think about it because I don't feel that way. I don't feel that way in cyber insurance. In cyber insurance, there was a group of about 40 of us that sat in the room in the early 2000s trying to figure out what this internet liability situation was. And were there more men in that room? And I will never forget, because it's like the true crux of the people who grew up in cyber insurance together. Were there more men in that room? Sure. Were there women in that room? Absolutely. I was not the only one. I feel like cyber insurance had adopted the female and the entrance and being there just from the get-go. And we have been representative ever since. We have high executives. The woman that runs AIG's global cyber team is a woman. And she's been in that position for a very long time. And I have other examples of that with large insurance companies and obviously large brokerage companies. So I never really felt the challenge of being first of all, I'm in insurance. This is a man's world. This is an archaic suit and tie, let's do deals on a napkin man's world. I think that has shifted tremendously because cyber is so out there, so evolutionary. And most people are scared about it. They don't know it, don't want to talk about it. They're constantly, everybody always wants someone on my team on a phone call because they're just like, that it's like taboo. So I think it's a little bit more open and inviting and has given the opportunities to women that you wouldn't have necessarily seen in other traditional lines of insurance. Mm-hmm. So I don't have, and I do think that it's come a long way, but I think that we had a lot of runway in the beginning.
Yeah, I can see that. I can see that being different from the CISOs, where I can count on my hand how many that I actually personally know that are women, and on the other hand, how many are men, right? And how it's so different from a board perspective. But you're right. I think that the insurance business, because it came out of property and casualty, because it came out of E&O, that we had more women in there to begin with. So there were more women at the table. So I do think that's a great distinction.
But the insurance, I do want to say, just in cyber, the insurance community has done such a much better job anyway, in general. I certainly can tell you that my employer does a fantastic job of putting forth female candidates, candidates of color, diversity for jobs like you feel it. I was at Wells Fargo for 15 years. They did it. And it continues to be and getting better and better. So I do feel like in general, the insurance industry is trying to catch up to other, from where they, really traditionally are stodgy, archaic, suit and tie, Wall Streety type, industry.
Yes. Okay. So one more question before we open it up to take some of the questions that people are putting in the chat, and make sure you put your question in the chat, please. Is the hardening of the industry. I've heard over the past several months now that we're seeing a hardening. What are you seeing? So
when I think hard, like a hard market, I categorize that as I can't find insurance. Like people have said that. First of all, you're right. That's like what's out there, the media, rising rates, hard market. We are not in a cyber hard market. There is a ton of capacity. There are new entrants all the time. There are MGAs, managing general agents, that are using other paper on top of paper, Lloyd's, Bermuda, Asia. I mean, we have so much capacity in the market. It is extremely challenging to build these large programs just because of the pricing of this, and we can get into that. But notwithstanding that, we have a lot of capacity. So I wouldn't categorize cyber as a hardening market. How I would categorize it is a firming market with respects to rates. because
Okay.
it was, for the first 15 plus years of it, it was nobody really understood how to price it, and they still don't, but it would be competition coming, diving for the floorboards, right? Now in the last 7 to 10 years, and the rise of increase of, some pretty substantial, PCI losses were prevalent, late 2000 into the early 2010, area, that has died down a little bit, although they're still there. We don't see massive class actions, as much, but they're still out there. It's the proliferation of the business interruption arising out of ransomware malware that's really causing that. Rates are increasing. I think that you had a panel a couple of weeks ago to talk about just the cyber insurance. We've actually have our Q3 data. Rates are increasing, I believe, 7.2% on our programs. So considering that a year ago, there was 0% rate increase, I guess you can see that as being like, okay, underwriters are really trying to stretch the market, and they're all coming together saying, we need rate to support these losses and keep the profitability. It's a very profitable business. I want to make sure that everybody leaves the phone, that insurers will tell you that regardless of what you're reading every day and what we're seeing every day, it's still profitable. So tons of capacity in the market, firming in respects to rates, but still not firming with respects to coverage. We have taken this coverage from this to this in 5 years. Why does a cyber policy cover system failure? It has nothing to do with network security, really. It has nothing to do with privacy. It's some kind of failed, unintentional failure of your computer system. It really has nothing to do with cyber, but we couldn't find any other place for it, so we shoved it and we forced the underwriters to cover it.
It's an availability metric, so that's
right.
Why it got.
One of the questions that came, these underwriters are paying ransom payments weekly. And some of these ransom demands, as we've already heard, and I don't want to, beat a dead horse, is, they can get, 7, 8, 9-figure, ransom demands, and they're getting them weekly. The policies are paying. So that's working too. So everything is, kind of changing, and the dynamic is changing, but the policies are working, and they're doing exactly what they're intended to do. And that's what's kind of causing what we're calling like a challenging market. Like, it's not soft anymore, where we can get, we can build a $300 million program, and we can dictate to the market. You can sit here at 25 million, excess of 250 for 6,000 a million. Like, that's what we were doing for the last 5-7 years as we were building, these programs. And we were telling them basically, if you want to participate on this program, this is where you can, and this is what your rate. It's flipped to say, we want to participate, and here we have tons of capacity, but we're not going to write this for anything less than 10,000 per mil. Mm-hmm. So what you want to categorize that is, I would not call it a hard market. I would call it a firming rate market. And I would call it challenging in the fact that, underwriters are really starting to flex their muscles a little bit to say, hey, we're paying all this stuff. Stop beating us down and now start listening to us. So that's the dynamic that we're dealing with right now.
Mm-hmm. So one of the questions from the audience, from AJ, is about how are you determining inclusions and exclusions? Are you looking at some of these third-party ratings and scorings? Are you looking at their security assessments? What's the method to the madness behind that?
Well, the underwriters are working and employing these third parties. And again, the three that are really prevalent in the insurance industry are BitSight, Science, and Security Scorecard. And then there are absolutely others and other vendors that they're using, but just from a monitoring, scanning perspective. So they are the ones. We are not. We have to actually present that to our clients to say that is happening in the underwriting process, and that they need to answer to whatever some of those findings were, whether they're false positives or there's actually something to investigate. So if you're talking about inclusions and exclusions, the way that the markets work is they're either going to write your risk or they're not. We wouldn't accept that they say, okay, we're going to deploy our capital. We're going to give you 15, 20 million of capital, but we're going to put this exclusion on the policy because we've detected that you are vulnerable in this area and you haven't figured out how to master that. So any claims arising out of that, we're going to exclude. That is not acceptable. That's as a role of a broker going to a company and saying, oh, by the way, you have this insurance policy, but because you haven't provided satisfactory answers to X, Y, Z, you're not going to be covered for that type of claim. That's not acceptable. So, there's no.
Would it impact the level of the price of the policy at this point? Would there be a premium put on if they had poor controls in place, as an example?
Not really, as crazy as that sounds, not really. Like, underwriters are either going to write because they feel comfortable writing whatever that industry, whatever that size company is, and that ever risk profile. Now, if they come through with a bad underwriting submission or a negative underwriting submission, they're just going to choose not to write it. Or they might say, you know what, they didn't have the best security, they didn't overwhelm me, but they're only $1 billion company, and you're asking me to sit above 400 million, and the pricing's pretty good. All right, I'm happy to deploy 5 million of capacity, right? But they're not going to be in the first 100 million of the program because they weren't in love with the risk profile.
Right.
But I wouldn't call it as like, well, you can have my capacity for $50,000 per mil versus the 15,000 per mil you're asking for, and I'll do it now because I don't feel comfortable with the risk. It's really not, that's not where the insurance industry is.
Well, it would be very hard to keep track of all that. That would be something that would be a management exercise in and of itself, right? We're seeing a lot more asks on the quantification side from what we're doing in terms of being able to actually understand how much the ransomware limits, sublimits should be. And one of the questions from the audience is, what are you seeing in terms of ransomware sublimits, and should every company have ransomware insurance?
So here's an interesting factoid. K&R policies have cyber extortion coverage under them. So there's your sorry, another appointment in 15 minutes. It's popping up on my screen. So we actually have circumstances when it comes to just extortion and ransomware, we can have 2 policies. Historic right. K&R policies, everybody saw proof of loss, right? Russell Crowe, whatever. We do that too, where you actually, like, you have a physical extortion of something, whatever. There is actually cyber extortion policies that parts of those policies. So we have many times come into play where we actually have double coverage. All right, and just a really interesting factoid for people to know that. And there's usually a 0 retention under your K&R policy. Could you imagine someone's life being on the line and it's like, oh, well, let me see if I could pay that retention. So they historically, the way that kidnap and ransom policies have been sold is with a 0 retention. And on our policies, you can have anything from, for a small company, a small retention, but, when Fortune 500 companies take, multi-billion, $1 million retentions, not billion, million. And so you could have that situation. But what's happening here is that we can't sublimit. You can maybe sublimit for these smaller policies for SME businesses. Small middle market businesses will get $1 million policy and maybe they get a $250,000 sublimit for ransom and cyber extortion. That's out there. Absolutely. That's out there, whatever. But for the companies, first of all, that my team deals with, even if they're not even Fortune 500, but they're a sophisticated, $200 million company, there's no sublimiting. The market can offer the coverage and we have to get the coverage as the role of the broker. We have to make sure that we're exhausting everything and we have the breadth and the depth of the coverage. So we don't really accept sublimits on the stuff that we are brokering in the SME business for sure. And we have stats just like you have stats on average ransomware payments, et cetera, in all different categories. But look at the municipalities. They don't have money, and they're getting extorted for 7 figures. So is that $1 million policy that they're buying really enough? But then again, they don't have enough money in their budget to actually have, a breadth of depth of insurance coverage. So it's, the pendulum.
Yeah. So what we saw last year was that companies that had too much exposure, too many records in their systems, what we were telling them to do was to archive those records offline so that they could match their aggregate limit, which we quantified for them. So that was something that we saw across the board, was there was a huge disconnect between what's really happening in your digital asset world and what's your exposure is and how much you can afford, because no one except a few can afford $750 million worth of coverage. So average policies probably being somewhere around 150 to 300 million for some of these Fortune 50, Fortune 200 companies, right? So the quantification aspect is a new science that everyone's looking at, and we were just written up in the hype cycle. So what we're teaching everyone in class is how to quantify based upon the amount of record exposures that you have, and the amount of business that you're going to lose as a result of the ransom. And what we see is that people really want to know exactly what that is, especially the larger organizations. For the SMEs, they can get away with kind of guessing it. But at the end of the day, the larger ones, I think, have more skin in the game. So they need to really understand where are those gaps in their programs and their exposures, and how do they use insurance as a transfer mechanism, but at the same time, understanding that there's a responsibility on their side to make sure that their infrastructure is aligned to the strategy.
Yeah, no, for sure. And I think we're talking about ransomware and talking about everything else is different. So let's talk about, like, I'm trying to not say to any of my clients, but a large breach that affects, you have business interruption, you have breach response, you have third-party liability, you have your regulators all over you, you have, you're like triggering all 9 insurance agreements under the policy. That's where you have to really worry. That's where the exercises come in with our clients about how big could this really get? How much money could I be really back? Because I can tell you, we're handling one of the largest breaches that has happened in the past year. So you can do whatever. They had $400 million of insurance, and it's not going to be enough. Right? So that's there. But if you're talking about ransomware for a middle market company, like how much is enough? Like we're dealing with a lot of companies that have $5 million in insurance, and and between the business interruption that is suffered as arising out of a ransomware event and the ransom itself, it's going to be just fine. Right? They have the balance sheet, the balance sheet protection there. So you have to really understand the size, how much it would cost you. These policies pay, not to get you back up and running, but they pay your business interruption loss. If you're down arising out of a sophisticated attack, and you can show business interruption loss, like revenue and profit loss, these policies pay you back for that. It's not just the ransomware and the malware or whatever happened. Same with system failure. The 2 largest claims I had this year from my clients have been system failure claims. Failed integration, failed implementation of systems into some aspect of the environment, changing over a legacy system to newer technology, and caused disruption and entire facilities to shut down. And we're talking about right now, I'm working out one, it's going to be about a $25 million claim just for a system failure. Yeah, so there's a lot that goes into this, right? It's not just, that these tools, we provide tools in the toolbox. We are not the answers to say, we're measuring your totality of cyber risk. It's just, you can't do it, but you have to be able to understand the tools to use that really give you an understanding of your business and potentially all the scenarios that you can go through that say, what could be our worst case scenario? What could be that worst case scenario? What is that 1 in 100? What is that 1 in 100 event? What is that 1 in a million event? And what is that 1 in, like, it's going to happen to us event? What would the financial law, like, it's going to happen in our lifetime. So what would that be? And then you make decisions on limit adequacy based on, triaging a lot of those, different scenarios.
Yeah, what another aspect of that is the business and their growth projections, right? So if they're innovating and they're using a lot of resources, and all of a sudden there's a ransomware attack or there's a data breach, the resources that have to go around that, from the incident response perspective, from the loss of revenue perspective, are going to take away from the current programs that they have in place. And I think that's another aspect of what businesses have to look at. If they're just growing, if they have some kind of a cash cow business where they're growing and growing and growing, and it's just a matter of continuing to sell and they're not innovating, that's a very different situation than a company that is innovative and is relying on innovation to meet their revenue goals and their projections. I think people have to look at that too. Do you see them considering that when they look at their insurance as well? Not really.
Not so much. And then I'm looking at the question here, someone asked about COVID. That is an interesting, like, we've done so many COVID, webinars, just Marsh in general, and they always ask us to show up to the table. Of course, there's an increase in events since COVID, right? Like, the attack surface has expanded. The underwriters are seeing more frequency of claims, not necessarily severity, just more frequency, obviously going to the remote environment. And yes, I will tell you that I have a COVID tracker. I started on March 30th just to see how much new business. Now, we follow our numbers much quicker, but just from our perspective, how many of our clients are buying increased limits today, and how many new buyers. And because we really thought we were going to be negatively affected by COVID, just because you can imagine some the distressed industries, a lot of our retailers are, hospitality, everybody that's been affected, are they going to reduce their limits? Are they going to whatever? So we've been tracking. We are binding more coverage every day. So the take up on insurance post-COVID has been very healthy. Increased limits. We have sold increased limits on majority of our programs. So whether it's just 5 million more or 10 million more, but we haven't really had a big impact, right? Because our policies really are our policies. They would have responded before, and they would have responded now. And like I said, you'll see the firming rate environment and the underwriters, resulting response to that will come out, and it will come out through 2021 and et cetera. But we don't have exclusions on our policies like other property and casualty policies are coming out with COVID exclusions. We're not doing that. There are no COVID exclusions on cyber policies. And so, I will tell you that it hasn't really had an impact. COVID has not had an impact on a business, if not just buying more insurance, buying additional limits on programs that are already there. And there's been no constraining of coverage. So that's been pretty stable, and we hope to continue that.
Do you see more buying as a result of COVID? Do you see people becoming more aware that they need to have this in place?
I don't think it's aware. I think they're aware. I think that they just, if you have really knowledgeable folks on the other end saying like our attack services, absolutely has tripled or doubled or whatever the case may be. And then obviously just the whole remote challenges of a remote learning, a remote environment. I think that they understand it and they have those discussions, and those are part of the discussions of limit adequacy. What do we want to do? And then how much do we have in the budget? Can that work this year? Can we look to increase it this year? We have retailers that are looking to increase their limits. They're 60% down on their revenues, and they're coming to us and saying, because their exposure hasn't changed. They still have all those records in their environment. They're still running their businesses, right? And they can't afford to have a ransomware attack right now. So they're saying, what can we be doing? So we've seen some surprising results arising out of our COVID tracking that I didn't expect, heading into it, when we started this in March.
Yeah, it's making some interesting. So question from Ursa is, if buyers are confused about how much cyber to buy and what type of cyber to buy, how would you advise them?
Well, you can certainly go on our website and find a host of information along with other insurance professionals, whether it be brokerage operations or vendors that specifically work in insurance, because there are a lot of good materials about how to determine how much to buy, kind of tool, obviously tools in the toolbox that can help you with that. What type of cyber is working with your insurance broker for you to really truly understand. This policy has so many tentacles. It's scary. If you're not in cyber, like you don't want to be in cyber because you're like, I don't touch that. It's like a scary, and it's not an easy policy to navigate. You've seen one cyber policy. You've actually seen one cyber policy because the definitions in that policy is different than the definitions in the carrier to the right. So you really need to be with a knowledgeable insurance broker that can explain to you what type of it, and then to talk about how much. There are so many resources, and you can ping me after the call to point you to so many resources, whether it's through Marsh or through others. There's so many third parties that issue such great guidance on things to consider when you're looking at your own organization and how much to purchase.
And that's something that we're teaching in enterprise cybersecurity as well, is there's a whole module on cyber insurance and what is an aggregate limit? What is a sublimit? What do they do? How are they paid? What does a typical policy look like? How do you quantify them? And how do you prepare yourself to figure these questions out? What is the ransomware strategy? That's another thing we haven't had time to get into, but something that companies really need to know before someone calls them up and they understand that they no longer have access to their systems. Okay, so we've got time for maybe one more question. Let's see.
I don't think we have any more. I think I answered them. Okay. Oh, wait here. Did you set up an internal cyber?
So someone asks if you set up an internal cyber risk assessment company that provides underwriters with information, or do you use outside vendors?
So we at Marsh have our own proprietary assessment that we developed, and our clients that complete it, actually, it is that robust, and it follows NIST, and it's very much in line with what, you know, at least from not even a basic, but a control environment perspective, the underwriters are looking for. So we do not, we work with third-party vendors for other things, but our own assessment is our own proprietary assessment, and the underwriting community will use that in order to underwrite, you know, along with whatever presentations are provided by our clients. So combination, but our assessment tools are proprietary.
Makes sense. Great. All right. Well, hello? Hello? Okay. All right. So we're just about out of time. Meredith, thank you so much for your time today. It's been such a pleasure listening to you and hearing your insights. And if anyone has any other questions, please send them our way, and we'll be happy to make sure that they get answered for you if you think of something later on that you didn't have time to ask today. So thanks, everyone. Have a great day, and see you in the next Insight series.